What's up, guys? Welcome back to DCA. So what we're going to do today is take a look at some metrics in order to try and understand where this market is at right now. So as we know, we've been in this downtrend for a few weeks and there's a lot of uncertainty in the market. And I think that's well founded. A lot is going on at the moment that, really could see the market go either way. So we're going to take a look at some things in order to help us understand where we're at right now and where we could be headed. We recently released our website, polaritydigital.io, as many of you know at this point. We have a full range price service. We have a workbench feature, which allows you to come in here. You can load all of the various metrics and risk metrics that we have on our site. You can perform your own calculations on these metrics without needing to know code. Since we've been working on this website over the last few months, a lot of people have came up with some interesting metrics by going in and utilizing the various risk metrics that we actually publish and kind of finding their own metrics or own ways of analyzing the market using this feature. So we released the website last week and, we were kind of expecting maybe tops, Mark and I over at Upside Down Data were talking. We released this site together in collaboration and we were expecting maybe 30 people, 30 or 40 people. And we actually ended up getting hundreds of people signing up for the site. So we're really excited about that. So one thing I just want to quickly mention is we actually have a Discord channel for the Polarity Digital website. So if you come over into the Discord, and I'll leave a link to that in the description below, and if you're a Polarity Digital Pro member, you can message myself, Mark from Upside Down Data, or one of the moderators, and they'll get you into the Polarity Digital Pro members Discord channel. Right now, the price for the website is $15 a month or $130 for an entire year. We're still keeping it kind of at an introductory level. So we want to give people that have been following our channels for a long time an opportunity to get in at a lower rate. So we're kind of keeping it at a lower price for the moment, but that will be going up over the next couple weeks. So, if you're interested in the site, if you're interested in all of the risk metrics that we publish, you could head over to polaritydigital.io and check out the site. Even if you go to the website and don't become a Polarity Digital Pro member, you can still use all of the features on the website. You just won't have access to the risk metrics. So you can come in, you can use the charting service. We have a full range price service here. And we're going to be adding a lot of new metrics, on-chain data. We're going to try and add sentiment data. So we're looking to do a lot with this site now that we've actually launched, and we're really excited about going forward. So with that said, guys, let's get into it. Okay, so let's quickly just take a look at the price of Bitcoin. So obviously we've been in this downtrend ever since November of 21 when the bear market started, the Fed started raising interest rates. And what we saw was that as we came down here and bottomed out at around 15, 16K, we went on this nice rally. In fact, we were up over 100%, basically from the fallout of the FTX event. So we got all the way up to around 31K. Once we got up to this level right here, notice that how strong of a resistance level this was. So this was actually a support zone that we used all throughout the bull run. So you saw back here in January and then from May until July. And then we even got very close to it down here in January of 22. And then we finally broke below in May of 22. So once we broke below, then it became a resistance level. We got rejected right off of that around 31K level. And, that was to be expected. And we're going to show you some metrics today that we used in order to kind of establish the fact that it was very likely that we were going to have a hard time getting above that level. And we were kind of mentioning this well in advance without even needing to look at the, support and resistance zones. Okay. So we've fallen below recently. We've fallen below this 200-week moving average. It's definitely not a great sign. We'd rather us kind of holding that level and bouncing off of it. It's not something that's a lost cause at this point. The same goes for this 20-week moving average. And as you guys know, this is one of the levels that talked about a lot. You'll notice that this level tends to be very important during bull runs, okay? And actually ends up being important during bear markets as well, because we go below this level and kind of use it as a resistance zone until we're able to break above. And then typically that leads us into a large rally. That's kind of stuff that I think everyone is well aware of at this point, right? So what we want to do is see how bad is it right now? The fact that we're below these two lines, what's below us, what's above us, what might we expect going forward? This graph is a little bit busy, but it's something, if you're following this channel, that we've talked about a lot. And I just have to laugh every time because you see all these people doing technical analysis all the time, kind of drawing lines all over the charts and, trying to figure out, where's the support going to be? Where's the resistance going to be? Here is the support and the resistance, guys, period. This is showing you where these Bitcoin are actually being held at. Where is the physical location of these Bitcoin? In other words, where is the location where these Bitcoin last moved? We've been using this chart or this type of analysis all the way from basically from the top. Back when we were at around 55K, 50K, we started showing this graph. So we've basically been identifying almost the precise location where the price is going to head to. When we were in this just rapid decline, we were identifying, hey, this is where it's very likely we're going to go. This is where it's very likely we're going to go, because we can see where these Bitcoin are. And we can then break these numbers down into long-term holders and short-term holders. And we know the characteristics of these two cohorts. We know that short-term holders tend to create sell pressure on Bitcoin, especially as things are starting to look unfavorable in the market. And we know that long-term holders tend to be stubborn. They tend to say that, hey, if I can buy back in at my cost basis again, I've got some more money on the sidelines now. If I can get back in at my cost basis, I'm going to do it. But I'm certainly not going to sell. That's not true in all cases. Obviously, selling does occur. But in the vast majority of cases, much more often than not, long-term holders are going to continue to be long-term holders. Now, I don't have this broken down into varying degrees of long-term holders. I basically have it broken down completely into short-term versus long-term holders. And the breakdown is not arbitrary. Greater than 6 months, if someone has held this asset for more than 6 months, it's very likely, statistically speaking, and we have the numbers to prove this. This isn't just, something we're just throwing out there. If you've held for more than 6 months, it's very likely that you are going to continue to hold. And if you have held for less than 6 months, your statistical chance of selling on any given day is much higher than any given person who's been holding for more than 6 months. So in the yellow, we have these short-term holders, and you'll see where they are distributed at, okay? Then in the blue, we have the long-term holders. Now, I'm only showing the prices from around 10K up to around 35K in this particular video, but we do have the distribution above and below this as well. But I only wanted to show you this range right now because in this video, I kind of want to focus on where we're at right now and kind of talk about what we might see happen if the price breaks to the downside, and as well as what may happen if we break to the upside. So the key thing you have to know is the short-term holders, as the price starts to get away from their cost basis. So if we just look here, let's take an example. And let me say one last thing here. This horizontal axis here, this is demonstrating to you how many Bitcoin are held at any given level. So you'll notice that at this 17K zone, which we've made many videos about, and I kind of talked about when we were way down here, how important this level is going to be. And we made a video called something, along the lines of the whales made their move. Because the amount of coins that we saw purchased at this level was enormous, much higher than we typically see. And this kind of bears out in this chart. Normally, you're going to see the highest amount of Bitcoin at any price level, at any single price level, at wherever you're at the moment, okay? But we don't see that here. Now, that's not true in one case. You're always going to see the most Bitcoin at the $0 to $500 level. And that's because the Satoshi coins are there. There's millions of coins sitting from 0 to 500, about 3 million coins. So excluding that level, you're always going to see your most coins sitting right around wherever you're at the moment. And the exception to that recently has been this level right here. So you had people come in and, it may have been one investor, it may have been several investors. You had a massive number of Bitcoin purchased right at this 17K level. And that was what started this rally. You just had a huge amount of purchasing there. It created a supply shock and it sent us on this rally. And you'll notice that, right when we were sitting at 17K, we had all this purchasing here and it sent us running up. Now, a lot of times what you'll see is this huge number of Bitcoin will kind of decrease and decrease and decrease as the price runs up because of the fact that those people are going to take profits. And we did see that to a degree here at this 17K level, but nothing, not even close to what we would normally see. So this tells me that this was some institutional buying here, or, when you think about the magnitude, the number of Bitcoin, 750K, and you multiply it by the price, you do the math. That's a massive number. There's not many whales out there that are going to be moving the needle like that. So this was institutional level buying. And, that continues to play out because we haven't seen these coins move. So even though they're short-term holders, they're only categorized at the moment as short-term holders because if we just go back, it's only been 162 days. And you need to hold for 180 days in order to be considered a long-term holder. Because remember, you want to hit that 6-month mark. So a lot of these coins, while they're being marked as short-term holders at the moment, will eventually, if whatever entity or entities bought at this level continue to hold, they will turn into long-term holders. Basically, we're looking at a whole range, a whole distribution here of long and short-term holders. And one of the key things is, and I kind of touched on this just now, the highest volume is always going to be wherever you're at because short-term holders make up by far the largest amount of volume every day. So you have traders coming in, buying small amounts of Bitcoin, trading the Bitcoin, taking tiny profits, taking tiny losses, that kind of thing. And so you develop when we're in one of these moves like we've seen right now, where we've just kind of been sliding now for, it's been quite a while. We've been on a slide for about 2 months, over 2 months at this point. And so we're starting to develop a lot of overhead pressure because as the price moves more and more, remember what I said about short-term holders, they are more likely to sell at any given point. So we have started to develop this overhead resistance. Okay, so that's right in this zone here, this 26K, right down here around 26K, up to around 30K. We have a lot of short-term holders that are liable to count as sell pressure as we go forward. So if you look, some of these guys, are starting to develop a sizable loss. So, it's not huge yet, but if you continue to see the market demonstrating downward pressure, I think you'll start to see these yellow bars start to sell off, and it kind of leads to a chain reaction where it creates sell pressure, until you hit a zone of support. Now, where is below us that we might start to see as a support level? Notice here, we kind of have this gap. We have this gap kind of right in this zone. There's just not much there. So if you use the visible range volume profile metric, this area right here from around 25.5 down to around 24K is what you would be similar to a low volume node. So you'll notice that there's almost no coins sitting there, right? We have some short-term holders who came in and they've been buying in around this 26K level, but below that, there's not really much. Now, fortunately, in this case, it's a very small zone. Back when we were in this decline, when we were sitting back here at like 30K, I kept warning people, you need to watch out because if you just look at this zone here, and this is kind of what we were talking about in the past, was if you look at this zone right here, there's just not a lot of volume in this zone, right? There's not a lot of volume between around 30K all the way down to around 20K. There just isn't much there. And why is that? Well, we only spent several days in that zone. So there wasn't enough time for long-term buyers to acquire at that level. And sure enough, that's what happens when you get into one of these low volume nodes. All right. So this isn't so important right now because the low volume area is very small at the moment, but it's a good principle to understand. When you're in one of these ranges where you just haven't spent a lot of time, it's very easy. If you lose that support level, which we did right here, we lost that support level. And remember, we said this was one we held all through the bull market. Once we lost that, it was game over. We knew in advance, and we were talking about it, getting hate messages because I was kind of talking about those levels back here at 45K, even when we were up at 40, when we were going on this rally up to 48K, I made the video talking about like, hey, we could very well see us crash below these levels. And if we do, we're going to see ourselves down in the teens or down to 20K, whatever it may be, because we have all these low volume nodes because we just haven't spent a lot of time there. So right now, that's not as important, but it's something to take note of. If we kind of lose around this 26K level, we could see ourselves quickly drop down to our next zone. And our next zone, so remember, our support zones are going to be formed by the long-term holders primarily. It's not going to be the short-term holders. Now, you'll notice that you do have these yellow coins here that were purchased all the way back here in February and January. So these could very well be turning into long-term holders, but at the moment, they're still classified as short-term holders. So I've kind of marked this one in white to indicate that it's not a, I wouldn't call this a major safety zone. I've heard a lot of people talking about this zone like it's a, a massive support level, and it very well may create a zone of support. But again, that's using technical analysis. That's just drawing these lines on the chart. This is showing you that, hey, yeah, there's some support here, but when we really look at the number of coins, there's less than 1 million coins in this entire range here, right? In terms of long-term holders, there's less than 1 million coins. So about 150, around 200. So maybe around 600K long-term holder coins in that zone. So that's not by any stretch of the imagination, that's nothing to sneeze at, but it's also not like a massive support zone. So what then would be next? What happens if we start to lose this 22K level? The next large support zone kind of comes here from around 19 all the way up to 21.5K. We have a lot of support in this zone. So again, this is one where with traditional TA, I've heard a lot of people talking about, oh, if we lose 21K or, if we lose 21.5, you're going to see us quickly drop down to 19. And I don't know that that's true because, let's talk about a few things here. So we have a lot of coins. We have a lot of coins at 21.5. We have a lot at 21 and then at 20, 20.5, 20, and then a ton again at 19.5. So any one of these levels stands to be a very strong support zone. All right. In addition to the fact that psychological supports exist. So I would expect 20K to kind of be a level where a fight would be put up one way or the other. In addition to the fact that we know there are a fair number of coins here. There's over 1 million coins, probably approaching 1.5 million coins sitting around this area here. Let's also talk about the fact that, to see ourselves drop below this level, 19.5 level, this 20K level, what does that take? Well, it takes a large number of sellers. And what we've seen is the short-term holders have absolutely been annihilated. The weaker hands at some of these higher levels have absolutely been annihilated. We've seen from 69K all the way down to this 32K level. Like I said, I'm not showing it in this particular chart today, but we've seen those levels just get annihilated. There were mass number of coins sitting from 30K up to 69K. Over time, we've seen those continue to sell off. So, the vast majority of the supply was sitting up in these higher levels. But we've seen these guys panic selling, capitulating, doing the full 9 yards. The things that we've been talking about on this channel that you want to try and avoid at all costs. So we've seen a lot of these things lead to these types of events. Now, it's not to say that they're the only ones selling, because they're not. Other entities have sold. Longer term holders that have, held since some of these lower prices, some of them have sold. But by and large, and this is objective, guys, I get a message every single time saying, oh, it's, such and such. It's, all the institutions selling. We have the data. We can look at the data and see who it is that's selling. It tends to be these guys that bought up here at these higher prices, kind of losing their nerve, saying, all right, we're at 30K. That's good enough for me. I can't deal with this anymore. And so, they've recovered some of their losses. If if you'd been holding since 65K and we were down here to 16K, maybe 30K starts to look not so bad when you were down, 75% on your investment. So being down only 50% maybe isn't the worst thing in the world. And so we've watched this continue to happen, and we have the numbers, and I've been showing this data over and over and over again all through the bear market to kind of support it. And I'm saying all this to kind of make the point that we have kind of exhausted all of the sellers. A lot of the weaker hands have been exhausted. So to see the price just absolutely tank, what would that take at this point? What would cause that to happen? Well, a couple of things, and these are all plausible and all worth considering. You could see something like this level, like this entity or entities that bought at this level. Let's say that they're like, all right, it looks like all this stuff happening, it's bad for the market, I'm going to get out. That's possible. You have millions of coins sitting from 0 to 500. Maybe some of those wallets start to activate huge number of coins. That's possible. Maybe some of those coins sitting from around 500 to 4K. There's a ton of coins sitting there, millions of coins. Maybe those start to mobilize. That's possible. All of that could cause the price to crash below 20K. I don't think you're going to see the retail market anymore kind of crash this market. They have been exhausted. But I just think that to grind all the way through the 23K level, to grind all the way through the 21K level, and then all the way below the 19.5K level, it's going to take something pretty serious. And, even if you do get below all that, as long as the selling isn't coming from this level, this 17K level, I would have a hard time seeing it drop below that. So, if you're worried about what's going to happen right now, I think it's an odd time because we've seen the stock market doing very well, the crypto market doing all right. I mean, it's a weird environment when, we're up 70% since January and we're only saying that we did all right. But that's kind of the nature of this game. You take a massive risk by investing in crypto, so you expect a very large reward. So, compared to the stock market, over the last month or two, we haven't looked like we're doing so hot, but those kind of things come in waves. They come and go. Now, if the stock market starts to turn south and starts to look ugly, I would be a little bit more worried depending on how severe it is, but I wouldn't expect a normal correction to kind of crash the price below the 20K level because of the fact that I would expect the market just to kind of, the volume just to kind of dry up as that happened. Guys, this is a long-winded way of saying expect possible downside pressure, especially when we look at, we're below the 20 week, we're below the 200 week. We're now sitting at below a major resistance level, one that we know of, right? And we can confirm that on the chart. We're sitting below some of these major resistance levels. If we do crash down, we do have a fair amount of support here. So, that's a good sign. If we do go on a nice rally, a nice big rally, it's clear skies ahead. And I've showed this in prior videos. Just look at how many coins are sitting above 30K, 30.5K. There's none. There's nothing. There's nothing. And we know what Bitcoin does. Just like we were just telling you that, this zone right here is dead man zone. If you look at it like it looked back at the time, that was a dead man zone, right? Low volume node, there's nothing there. But that's going to work the same way to the upside. And when you look at the numbers, this zone right here, there's nothing there, right? So if we're able to get above that 31K zone, and when we do, I think you're going to see the price go on a nice run. These coins right here, people that bought at this level, they've pretty much all sold, right? There's very few coins sitting throughout the 30K level. There's not a lot of volume there. There's not a lot of overhead resistance. And we know what Bitcoin does, guys. We know that, just take a look back here. Sometimes it takes a while. And, this was kind of a similar event. We kind of hit this resistance zone that we kind of used as support at the very end of that bull market. We hit that as resistance, bounced down. But what happened right when we broke above that resistance zone? Off to the races. I mean, you saw let's just see how many days it was, right? You were up 350%, on the order of 100 days, 3 months, you were up 350%. So if we are able to get above that level, there's just not a lot above us because this bear market has kind of been dragging on for so long. It's been nearly 2 years at this point. So once we're above this 31K zone, I think you could see us off to the races. So there's some good news, some bad news. The good news is I think 20K is a pretty solid level. It's not like I'm not going to sit here and tell you it's the most solid level because it's not like there's a ton of coins here, but there are a fair amount all the way down to 19.5. And then above us, once you kind of cycle through these short-term sellers, which we will do, we've done it at every level. It's going to happen again, just like it always does. Once we kind of cycle through these guys that are creating sell pressure right now, if we can hold some of these support levels like 24K, eventually we're going to break above that 30K level. And when we do, I think it'll be off to the races. So I know this was a long one, guys, but I just wanted to kind of really hone in on this every single time we've made this video. And I'm not sitting here saying, oh, look how smart I am. I'm looking at a chart and looking at a horizontal bar and saying, look, This is where it's at. This is where the resistance at. This is where the support's at. So it's not rocket science, guys, but people just, for whatever reason, and I think it's because a lot of the big TA guys on YouTube and Twitter, they come from the equities market. You can't do this in the equities market. It's like taking, it's like shooting at a bullseye blindfolded, doing standard TA. We don't need to do that. Why would you do that? Take the blindfold off, guys, right? You can see the targets right here. They're all over the place. That's going to be it for this one, guys. Until next time, as usual, see you.